afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Went Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are trading in a narrow 60-point range. Nifty continues to languish around its 50-day moving average. The FMCG index is the top sectoral laggard. HDFC Asset Management will purchase SL Group's non-convertible debentures worth 500 crores. This will transfer any loss made by its fixed maturity plan investors to itself. The stock trades lower by 6%. Jet Airways now trades lower by 50% after its lenders decide to seek its debt resolution through the Insolvency and Bankruptcy Code. And Dabur is trading lower in today's session post a downgrade coming by Goldman Sachs. Good afternoon, Neeraj. Well, some respite coming in for the markets after a sharp sell-off that we saw in last two sessions, though Nifty is still languishing in that 50 points range. Yeah, and chalk and cheese behavior in the companies which have corrected a lot in the last few days as well. Amit, good afternoon, and good afternoon, viewers. So about 17 odd points for the Nifty. The Sensex, probably around that range. The Nifty Bank has done a tad bit better, I must say. So up about 1/3 of a percent, 116 odd points, courtesy some of those beaten down names, the Indusins of the world moving up. We'll talk about that. But the market breadth should come up on your screen. Just pull up the advanced decline ratio and pull up the turnover once. The market breadth still in favor of the declines, and the gap has just widened in the last half an hour of trade. So we're back to those last hour uncertainties. Let's see what happens there. And the turnover, the volumes, cash market volumes still lower, and this has been the hallmark of the last few days, isn't it? Cash market volumes have been very negligible, FI participation virtually negligible, but derivative volumes very, very high. Bring up the heat map and show you what's moving and what's not. Well, Yes Bank down another 7% in trade, India Bulls another 6% in trade. So those two remain the big pain points. Well, Maruti, HDFC, etc. are down, but that's okay. There's no dramatic fall there. But these two, in principle, are the top pain points, and just not seeing any kind of buying from anybody in the last few days. What's gaining? Vedanta up about 2.5%. I think metals by and large seem to be having, at least the start was decent for the other metal stocks too. It's Vedanta specific right now, don't see too many others. Z is up, and as I said, banks. So look at what's happened out here. IndusInd Bank is up 2%, ICICI Bank a couple of percentage points. There is Bajaj Finance from the NBFC space, which is also doing reasonably okay for itself. So selectively, some banks are doing fine, and just the market is just kind of holding on. The mid cap and the small cap bring up those indices and the performance of some of the top movers up on the screen as well. So bring up the BSE 100 top gainers, and SRF 5%. I think this would be in and around record highs. Lots of upgrades. I think today too we've seen an upgrade on SRF. I'm missing out on the brokerage name, but an upgrade coming in. But big move there for SRF in the session today. Some gains for Ramco Cements. PI Industries continues to shine. And what's not done well, amongst other things, is ADAG yet again. So Reliance Capital, Reliance Infrastructure, Reliance Power, they continue to grind lower. Another day of very dismal performances by each of these. And then, of course, the small cap space should come up on your screen. And let's see what the small cap movers are doing. You'll probably see an ADAG name there, maybe. But Jet Airways is the showstopper out here. 40% lower. It was down about 45 or 46% at a point of time. Some weakness in CEAT, some weakness in ADH. As I said, RCOM is down under 3%. Persistent gains a little bit in the session today, and Himadri Specialty Chemicals from amongst the names that stand out. India Bulls Real Estate, interestingly, up about a couple of percentage points. But it sums up maybe some of the action that Liquid Universe is doing as well, but important to see what some of those liquid names have done. And Navneet, how is the derivative picture looking like? Well, Neeraj, if you look at the futures specifically of Nifty and Bank Nifty, no major addition has come by, not just in today's session, but also in the last few trading sessions. So as we speak, the open interest on Nifty futures is just up about 2%, premium maintained around those levels of 20 to 21 points. Bank Nifty futures saw unwinding of nearly 10% in yesterday's session, and that unwinding actually continues in today's trade as well, which is clearly telling you no fresh positions are being taken as of now. 1% lower, and the Bank Nifty futures have been trading at a discount. On the options picture, very important to highlight that with yesterday's around 150 fall on Nifty, there was aggressive call writing which came into the system. So the Nifty PCR, that is very close to the level of 1, and that territory actually tells you that the index could be in an oversold situation, which also triggers some sort of bounce back, which has not come in sharply in today's session. Still, we've not seen any more sell-off, at least from the last two sessions. So maximum open interest on the call side is at the 11,900. On the put side, it is at the 11,700. So that's a 200-point range. Definitely you can watch out for. And in today's session, specifically 11,700 and the 11,750 call strikes have seen open interest addition of between 4 to 6 lakh shares. On the put side, you've got 11,600 and the 11,650, where open interest addition of between 5 to 6 lakh shares have been seen. And as of now, Nifty specifically in today's session, which closed below 50 DMA yesterday, has managed to maintain that level. Right now, it is trading above that mark. Stock specific, Neeraj highlighted SRF. The stock has been an outperformer, not just in today's session, but also for the year. It's trading around its all-time high levels. In today's session, futures have seen long positions coming by for the year. Till now, the stocks are 50%. Look at the build-up on the open interest side, 46% higher, which is telling you at these all-time high levels, traders are creating more long positions right now, indicating probably there could be more upside. And today's move has come in on good amount of volumes on the cash side, which is viewed as a positive sign. So the white line is projecting today's volume vis-a-vis the average volume of last 20 days. That's the blue line for you. India Bulls Housing, that's the top loser for you on Nifty. The stock's down for the third straight session, and the cues that you're getting from the future side is that more short positions are being taken on this counter as the open interest has surged nearly 10%. And the third one I want to highlight is from the FMCG pack. That's Dabur. Goldman Sachs has downgraded the counter to sell, giving it a target price of 334. The stock's also fallen on high volumes on the cash side, and the futures today are seeing fresh shorting. It's down 3.5%, open interest up 10%, and the reasons highlighted by Goldman Sachs is that it is facing competition in the key segments that it operates in, and also slowdown in the rural market.
Yeah, well, it's showing in the way the stock or some of those companies have done. But I think the larger worry is the sentiment that is getting vitiated by the kind of falls that are happening in select suspect names. Shailendra Kumar of Narnolia Securities joins us right now on the show. Shailendra, always good having you. Thanks much for taking the time out. I wonder if people should make too much of the kind of precipitous falls that we're seeing in the ADAG group stocks, in a Jet Airways, in a Jain Irrigation, which is down another 9-10%. They could have been good companies in the past. They've had some issues and the stocks are getting punished. It's not reflective of the market-wide sentiment, right, Shailendra, or is it?
Yeah, surely. See, right now, the way the market is, we do not have a, in general, all-encompassing kind of a bull market, though the Nifty remains close to all-time high. So 12,000 something is the all-time high, and we are trading close to 11,700. So overall, the market looks very positive if I go by the Nifty numbers. But internally, inside the market, the division between stocks doing well and stocks not doing well, there's a very sharp divide, and which is expectedly so. Look at the way, even the largest event that happened this year, the election in our country, you expect after that kind of a victory for the incumbent government, the price will take a new trajectory, right? But look at where we are today, 11,700. It was there pre-election also. So the first half of the May, when you saw a kind of a fall because of bad Q4 number, what the election result has done is only brought the market back to where it was in the beginning of the May. So nothing is specific there. The way to look for, forward, this kind of anomaly in the market in various pockets will continue to my mind till this indecisive phase in the broader market persists. You need clarity on both earning trajectory for aggregate Nifty and Sensex, as well as various sub-pocket like cap-wise, sector-wise. You also require some kind of a clarity on the domestic macro. I think, the kind of issue we are having, all the, NBFC crisis and all, and we had a very accommodative monetary stance, but we require a strong fiscal kind of a step. And I think in that context, next year budget when it comes, next month the budget when it comes, it will decide whether in the next 2-3 years, the Nifty will have a compounding of 6-8%, 10%, or it will be 15-16%. So I think the most important event going forward will be the budget next month. If there is a clarity, if there is a concerted effort to bring back the investment climate, I think that's an important thing to watch for all of us market participants, I think. And then the market, maybe you can, make a linear forecast for the market. Right now, it's not linear at all. It's very indecisive, very divided between some good and many bads.
Some which are somewhere in between, Shailendra. I want your opinion on those. There is a Z Entertainment, which is hinging for a deal. There is an IndusInd Bank on the sentiment is start, but they've pre-provided for a lot of the provisions. These are all large names which have some specific issues which have brought down their valuations. Are you bullish on any of those?
Right. See, you have to see differently. If the business is great, then any kind of a short-term cyclical blip on the downside will be a buying opportunity. It has always been. I think I would add one name to the two names you spoke, Neeraj. SDFC MC is down by 6% today because of, I think, relevant factor for sure. But it's a great business, right? The kind of AUM you have in mutual fund is about 26 lakh crore in India aggregate. The bank deposit is about 125 lakh crore. If I can see the way the future will move in the next 4 or 5 years, then the overall mutual fund corpus will be getting closer to what bank deposit is today. So that's my own take, And surely today the hit on the stock, there might be another 5-6% downside. I'm not denying with the factor, but SDFC remains the most, the best brand appeal among the Indian masses. And the financialization of saving which is happening right now will be benefiting SDFC. So this one name, out of the two you said, I'm just adding this name. Something on more downside, it will become really attractive for a person like me who looks in the longer term wealth creation. Coming to the specific, the G, I think you spoke. I don't have any doubt on the business financials. It's a very strong franchise. As far as the media market concerned, I have my bullishness completely intact for next 4 or 5 years. Surely the balance sheet and the promoter group issue is dragging the whole concern around the stock. Now they have promised for a deal by 30th of September. I give my benefit of doubt. They'll be coming out something, and I don't think there is a lesser number of interest by global majors to part in the growing Indian media businesses. It's more about how the deal gets structured. So I still maintain a strong business like G or a strong business like SDFC, AMC on these decline for some relevant, inside the balance sheet issue or may overall some macro concern which has propped up. Will be a good buying opportunity. Maybe you have to, buy in tranches or something. You have to employ your risk management tool. But this story will pan out well in the future.
Okay. Hi, Shailendra. Good afternoon. What should one do with something like Yes Bank? Now it's down another 6%. Brokerages have been cutting down target price, and the latest one to join was Morgan Stanley today, giving it a target price of 95. Are you finding any valuation comfort? It's trading at 1 time to its book. The big question is, should one buy, or somebody who's already has Yes Bank in the portfolio, what should they do?
See, surely it's a bad luck if you had already in the portfolio for say last 2 years. Fortunately, we were safe there. See, the idea is simple. At 1 time price to book Yes Bank, the whole thing, you have to bet on 2 specific. Either you bet on the CEO, what he is saying right, or the new CEO. And if you believe the kind of, stress asset they are talking about, and they're talking about a specific group also that they constitute about 1/3 of the 10,000 crore stress asset they have. If the credit cost estimate that they have given for the next financial year, if that remains true, surely the hangover only remains whether Mr. Rana Kapoor will be coming back and influencing the board, and maybe the kind of change the current CEO is trying to bring about and execute in the bank, will that be materialized or not? Now, these are the 2 key issues, and the third, surely the $1.2 billion, the capital raise that the CEO is talking about, whether that fructifies. The Yes Bank is not a bad franchise, it's a strong franchise. Retail side is not that good, which the CEO is trying to correct right now. So if you bet on the CEO and you believe he will deliver the way he is promised right now, these levels, uncertainty apart, will be a good point for somebody buy the stock really in the longer run. But don't make a very large exposure to the stock, because event risk has not gone away from the stock at all.
Okay, the stock clearly coming under pressure in today's trade. It's down 6%, and the fall that you're seeing has come in the last half an hour of trade, trading around the mark of now 109. Shailendra, one stock where you guys have a positive recommendation, and that's on Kalpataru Power. Tell us what sort of returns do you expect from this one, and what sort of earnings forecast do you have for this year?
See, any company right now which is into business of providing capex to oil and gas and railway in India right now looks very attractive. So apart from the Kalpataru, which is one of our investment pick, other company also which has focused into or which are in the value chain of capex into oil and gas and railway looks very positive. Kalpataru Power, even if you look at the last quarter results, they have given a phenomenal kind of a growth in terms of their oil and gas pipeline execution as well as the railway execution. And both these space, oil and gas and railway, are doing phenomenally well. The T&D business also is very stable. Their subsidiary JMC and Subham Logistics, they are also coming out well. Right now, in the ROE, our return on capital employed for Kalpataru is about 19%. If the earning is panning out, it would be improving to 21% in next 2 years. The valuation is not challenging. It's trading right now at 14 times FY20 earning. So you have a decent upside because the sales and the PAT would be growing at respectively about 17% and 19% kind of a CAGR for next 2 years. So you are getting a 19% PAT CAGR with 21% kind of a return on capital employed at a PE multiple of only 14. So that gives you a very decent upside. The stock post the Q4 number has seen some kind of a sharp run up. So you can employ buying something here and maybe trying make the luck favor that something goes wrong with the Nifty and you get a Kalpataru even at a lower price. So you can add there as well. So this is a good decent stock to own in the portfolio right now.
Okay. There is a bit of gain in SRF today, Shailendra. I don't know how closely you look at that one, but if you have thoughts on that stock, and if not, on the specialty chemical space, which is the company that you at Narnolia like the most?
Surely, so say SRF is one company we have liked for long, but right now the price has gone beyond our, the kind of fair valuation we have in our mind. So now at this price, we are neutral on the stock for sure. See, the chemical business, after the China issue and all, the European and the US market has opened up for many of the Indian chemical company in the generic chemical as well as the specialty chemical where SRF is. SRF, the kind of acquisition or some licenses that they bought in US 2 years back are playing out fine. Couple of products that the SRF sells in the US market, even the Chinese, some company were dumping in the US with the anti-dumping duty got imposed, which is another kick which the SRF has got. Everything is very positive, but you have to keep in mind, chemical or specialty chemical will remain a cyclical business. You cannot assume a kind of a consistent mode. They are not consumer-facing businesses. Large part of the business is B2B, and cyclicality will always be there in the future also. So what you have to do is, this kind of a spurt, I think gradually you should start reducing your position and not increasing. Wait for some kind of a negative to crop up again, because right now, overall, in terms of the addressable market that the SRF has, its grip on that addressable market is very strong. So any kind of a short-term blip, if comes some slippages in margin here and there, which we expect a quarter or two down the line, will give you another opportunity to buy into the stock. But at the current prices, I think I am not very comfortable for more upside from the level where it is right now.
Okay. Shailendra, we'll leave it at that note. Appreciate you joining us today and taking us through your thoughts on the markets and also a couple of individual stocks. Just want to address the tire stocks. Pull up CEAT. That's seen major cuts of about 3 to 3.5%. It's also trading at its 52-week low. And it's just not about CEAT. Even Balkrishna Industries is trading at 52-week low. Remember, yesterday, suddenly there was a spike in all these tire stocks in the second half of the session. Then the 3% equity changed hands. It's Apollo Tires. Now, that stock was up about 7 to 8% in yesterday's trade. That's also witnessing profit booking in today's trading session. We don't know exactly who the seller was till now. But Apollo Tires is also seeing cuts of about 3%. So the talk of the street that correction in crude prices could be auguring well for this segment is not actually playing out completely. But what's doing good is the top gainer on Nifty. ICICI Bank has seen a good bounce. In fact, that's one of your top contributors also to the 48-point move that you're seeing on Nifty. ICICI Bank is sitting at with gains of about close to 2 to 3%. Remember, Macquarie had come out with a note with an outperform rating where they'd increased the target to about 525 from an earlier target of about 465. Okay, that's about ICICI Bank, but Yes Bank, which has begun to clean up its books following a change in leadership, and investors will need patience as it may take nearly 4 years for the bank to make its way back to normalcy, says Suresh Ganapathy of Macquarie. Listen in.
Yes, has been a big disappointment, and I myself have admitted in my note that it's been a big mistake. Yes, we underestimated the pitfalls of structured lending, and interestingly, when we were speaking to the corporate banking head at ICICI, the RBI rules are very clear on structured lending and promoter financing. When you're financing anything at the promoter level, that has to be backed necessarily by a good amount of cash flow. Now, what exactly happens in a holding company is that there is no cash flow. There is no operating businesses. So they have holding companies which which are operating businesses, but then that underlying itself is also weak, and the only way around the holding company is to service the debt is through the dividend model. So just purely because you have some additional shares being pledged as a collateral, then that becomes a collateral dependent lending rather than a cash flow dependent lending, which is what went to some extent awry with both IndusInd Bank as well as Yes Bank. So I think people have really realized the importance of really assessing the risk based on cash flow rather than purely on the collateral. Just because you have 2x collateral doesn't necessarily mean you go ahead and lend it, because recoverability becomes a big challenge. If the stock prices collapse 50% and 70%, you are in a big problematic state. So yes, it's not an easy business to do it, but what exactly happened was that in the pursuit of high valuations, and of course HDFC Bank and ICICI is being very active in the retail market, the only extra uptake came from structured lending. So clearly they were taking high risk, also meant high reward, but then when the risk fructified, clearly they have been caught off guard. So I think going way forward, they have to be a bit more careful towards this, and yes, they have to reorient their business models. Yeah.
On Yes in particular, so obviously they've been in the headlines, lots of churn at the board level, at the management level, and I see the immediate issue that there is unsettled sort of environment within the bank, but slightly more medium term it's good, right? I mean, because the previous management and the previous sort of overseers got us into this trouble. So if all of that is getting cleaned out and a new set is coming in, medium term it's good.
Possible, but then it takes a lot amount of time to clean up it. I mean, one cannot expect a CEO who has been 7 weeks in the organization as having cleaned up the entire bank, right? So I think there's more pain to come. Clearly over the course of next I would say 2 to 3 quarters, you can see more realization of some of the so-called watch lists that they have come out with. So that remains a challenge. And I think 5 board of directors resigning immediately after Rana Kapoor quitting, and all of them quitting because of personal reasons, apparently looks something quite suspicious. So I am a bit more reluctant, to be honest. So there is a price support here, 115 rupees perhaps, or 120 rupees where the stock is. There is a price support. So to that extent, yes, from a valuation perspective, one can argue it's fine with Yes Bank. But clearly from a business model perspective, do you think it can really do very well? I think it's quite difficult as of now to take a very positive or a convincing stance on them. And also you have to understand that Ravneet Gill comes with an experience of being in a foreign bank for 25 years. Now, things are quite different. Running a mass market private sector bank in a country like India is very different from being a CEO of a foreign bank. So challenges are quite plenty on his plate, and I seriously doubt execution capabilities, specifically in case of Yes.
So immediate risks are timing of capital raise, price of capital raise, growth, and still some of the structured lending, ADAG exposure, DHFL exposure.
Yes, that's true. Yeah? Those are all of course a risk which is going to be quite palpable in case of Yes Bank. And as I said, clearly reorientation of their entire business model. See, scaling up the retail franchise is not going to be easy. Pralay Mondal moved from HDFC Bank and Yes Bank, and I don't think much has been done in Yes when it comes to its retail portfolio, right? Both on the assets as well as on the liabilities front. So, and the competition for retail liabilities is just getting tougher and tougher. You know how difficult it is to operate with so many payment banks in the country, small finance banks, and of course the existing private sector banks, and deposit growth is very difficult to come by. Yeah. So the real problem with Yes Bank is their ability to scale up liabilities franchise in a hyper competitive market. That's going to really make the entire task much more difficult. Not specific to Yes Bank, it is a challenge for all of these smaller banks also. But then that's the need of the hour for them, because only when you have a solid funding franchise, you can go on to lower risk loans. Otherwise, then your margins go for a toss big time, right? So these things would take a lot amount of time. So the course correction is not going to happen in a couple of quarters. Easily, you'll have to give 3 to 4 years, and investors need to have a lot of patience for that. I mean, why should I buy the stock for something where the returns could be quite back-ended, right? So far into the distant future.
Okay, that's some commentary coming in with regard to the entire banking space and also what's been happening with Yes Bank. But right now, 11,700, just about thereabouts, is where the Nifty is trading. Remember, it's finding it very difficult to see some incremental gains coming by above the mark of 11,700. So that'll be a key thing to watch out in today's session, where the closing comes about for Nifty. And I just want to pull up the market breadth. Let's see if there is any sort of recovery which has come by, because the market breadth has been weak, not just today, for every single trading day of this month. It has been in favor of the decline. So the picture for the broader markets continues to look bleak. And the stock which is in focus today is HDFC AMC. In a move to rescue investors of its fixed maturity plans, HDFC Mutual Fund will buy non-convertible debentures of SL Group companies worth about 500 crore. Well, this would transfer any loss due to the investment from investors to itself. And Neeraj, it's quite clear, this is no SEBI mandate, this is no SEBI directive. What HDFC AMC is doing, it's on its own accord.
Yeah, and difficult to say whether it sets a precedent or it doesn't. A lot of arguments about whether this is the right way to do it or not, because shareholders now effectively are paying, well, you can, manage speaking, say a price for the mistakes that, or the apparent mistakes that would have been done. I think two ways to look at it, that the mistake that a few people are making is thinking that this 500 crores is a lost cause, that minority shareholders are definitely paying the price for it. It may not be, because if the much spoken about deal of Zee Entertainment does happen and the monies don't come back, then it is not necessary that there is a bit of a redemption that comes in. So that is part one. The question mark probably is over this whole issue of whether equity shareholder funds can be used to safeguard the interest of fixed plan, FMPs or otherwise in the future some other plans, whether that can be used or no. And effectively, if high corporate governance maintains that it shouldn't be, then I think the equity investor in today's session is right in punishing the stock the way it has. Now, from a practical point of view, you know that by and large, the group is known for its corporate governance and integrity, so on and so forth, etc. Years of proven track record. HDFC AMC in years of proven track record as well. And even the basic numbers, 500 crores versus an annual profit of 900 odd crores, 950 odd crores that it does every time, with all of it not gone, you've got to ask how much of real damage does it do to the long-term growth story of HDFC AMC. And if it doesn't, and if you're convinced about HDFC AMC any which is as a stock, maybe times like these, today, tomorrow, whatever time, might be times to buy into those companies.
A group like HDFC can maybe absorb a loss of 500 crore, but the bigger question is whether they're setting the right precedent, because not every group can afford to do this, what they've done, buying NCDs and shifting the loss to their own books.
Yeah, I reckon this is probably because they were one of the AMCs which had entered into the standstill. I doubt that all the companies or all the AMCs will be able to do this every single time something like this comes about. And if they haven't entered into any kind of a standstill agreement with these, with the company, so that is one key thing. But so I think that's the debate, and I know social media is agog with this about whether it is right or wrong. And if you draw a clear straight line, divide into black and white and no shades of grey, then you would argue that from an equity shareholder's perspective, this is probably not the right thing to do. Yeah. But I think maybe I may be wrong, but at some point of time, the stock will take this in its stride. Today's reaction, though, you would presume is warranted, even if the amounts were negligible.
Sure.
But I think we'll get in experts to talk about this. I think Shailendra Kumar of Narnolia was talking about this as well, that weaknesses into such companies should be bought into, because it's a temporary issue and not a permanent issue. And for all you know, Navneet, it might not be an issue if indeed the deal is reached.
Sure, because there is a room to recover the 500 crore amount for sure.
Let's wait and watch what happens there. But yeah, so that's on HDFC AMC. But you know what? We should get started with our guest for the last 1 hour of trade, because the markets will gyrate a little bit. The market breadth is already showing signs of doing that. Let's get in our experts on the show. And before we get in our technical experts, let's get in Sunil Shah. He's portfolio manager at Turtle Star. Joins us for the first time on Bloomberg Quint. Sunil, good having you. Thanks much for taking the time out. And, I'm Neeraj here. What's your sense, Sunil, of what's happening to, one, the fundamentals, and two, the sentiment surrounding the markets right now? Because every day when we see on social media or on our feed when the queries etc. come in, it's not that a lot of stocks are falling, but the conversations are around the nervousness in ADAG, Jain Irrigation, Jet Airways, etc. And people are painting the sentiment of the market with the brush that is applied to those few companies. They are few. They are not constituting the market at large.
True. So I think market is completely going through a massive transition. It's a complete demarcation between quality on one side and people who have borrowed significantly or pledged shares or done capex which was unwarranted. So market is currently punishing them big time. So all the decisions that they had taken in the past in terms of going overboard, because even the liquidity was easily available. So borrowing was easier, and the lenders also did not do the due diligence which was required at the time of giving money. So it is all of that percolating at this point in time. So it's not an event which has happened as of yesterday. It is a series of things which has led to this event. So I think that is the big thing which is happening in the market, and market is really wanting to be in quality things. So quality is trading at huge premium. Again, that is not something which people or investors would be very comfortable with. But given that there are not much amount of choices and liquidity is coming, no other asset class is also available. So money which is coming is again getting invested into those few, and valuation is taking a backseat at this point of time. So it's a situation, it's a transition phase, and whenever there is anything which is overbought or overbought, we come through such phases, and then the new sectors and the new companies emerge, and that is how we have seen this. So if we go back 2000, it was the IT boom, and that was like almost 26-27% of the overall weightage in the Sensex. 2008, it was the R group, Reliance group. We had the RCom and everything. Now we are having this NBFCs and the HFCs. So again, this was a 10-year lending process which was there. I think we are seeing that clearance happen, and that is what is happening in the market right now as well.
So you would reckon that this clearance would lead to a sector like NBFCs becoming a lot more consolidated / smaller as well, because the needs are immense for lending in the country, right? And do you think that banks will therefore take over the stuff that NBFCs have been doing very well until now? I mean, by very well, I mean the rate of growth, not necessarily the quality. But the rate of growth.
Yeah, so even in the private sector banks, we are seeing change of leadership happen, right? And private sector banks almost now have about 30% market share in the overall banking space. So from public sector banks, the business has shifted to corporate banks, and NBFCs have also, so I think corporate banks with change in leadership will now again try to capture market share of NBFCs. They already have an advantage of presence across the country. They already have an advantage of low cost of borrowings. So I think change of leadership in those banks will lead them or drive them to chase the growth which NBFCs was doing. So NBFCs were borrowing at 9% and lending at higher rates, which was like 12%. And the higher rates are clearly a case for higher risk, and which is something which the new leaders in these corporate banks understand. So risk mitigation is their core focus area. And I think so business will certainly be significantly better for those corporate banks going forward. So I think that's the way approach.
Okay, Sunil, stay on with us. We'll love to get your investment bets also, as you've highlighted, that stick to quality. But meanwhile, we'll just get you some technical ideas going. We're joined by Sacchitanand Uttekar of Tradebulls right now. Hi, Sacchitanand. Good afternoon. While Nifty is unable to hold on or see any sort of incremental gains above that mark of 11,710 or 720, which we've seen today, are you recommending to take any sort of fresh positions on Nifty or on Bank Nifty?
Well, good afternoon. I think market is just nearing the lower end of the expected consolidation range. So if you look at the data from 23rd of March, May, we have seen that the markets have been consolidating within this high-rise swing candle with a low somewhere close to 11,600, and 12,040 has roughly been the resistance. So market is in the final legs of this particular correction, and probably it won't be fruitful to get into a long position immediately, but somewhere close to 11,640, 11,620 would be an ideal level. So it is a good sign of exhaustion which is coming in when we look at some of the oscillators. So probably not right away, but definitely near the zone of around 11,600, 650, 620 would be an ideal zone wherein some long trades in Nifty can be considered. The stop loss for the trade would be around 11,580 on a closing basis, and a rebound can be expected back to around 11,800, which has been the midpoint of this particular range. So not right now, but probably some more slippages, and then some long trades should be initiated. As of now, if anyone is short in the market, then this will be a good time wherein some of the short positions can be reduced and book profits.
Okay, so that's the advice coming in from Sacchitanand. If you're holding short positions, probably you can cut out a few short positions at these levels. Right now, Nifty trades just around its 50-day moving average. But Sacchitanand, in terms of individual stock ideas for this afternoon, which are the stocks that you're recommending?
Well, we have been maintaining a long-short ratio. So on the long side, we are getting some signs of reversal in a stock like Torrent Pharma right now. If you look at the overall derivative data, 1480 has been a very good support. There has been confident put writing near this particular base. In yesterday's session, we saw a bullish hammer getting established on the daily scale, and that's why we see that the follow-through action which is witnessed in today's session could extend right up to 1550. So long positions can be considered in a stock like Torrent Pharma on a reversal basis. 1490 would be the stop loss for the trade. On the short side, some of the FMCG names have not been doing well in last couple of trading sessions. If you look at Britannia per se, it has breached below its 2-week swing low. Even if you look at the daily RSI, it has slipped below its previous swing low. So we expect that there could be a follow-through action in this particular counter, and that's why some short positions can be considered in a stock like Britannia. The stop loss for the trade on the future should be placed at 29.20, and a target expectation of around 2800, 2820 could be seen in a day or so.
Okay, so those are some stock-specific ideas coming in from Sacchitanand. That's a sell call on Britannia and a buy on Torrent Power. Sunil, you said stick to quality. So one set of quality stocks are there in the FMCG pack. You've got the HULs of the world, and of late ITC has been an underperformer in the last 3 years because of the taxes surrounding the tobacco space. But we've also got a downgrade coming in for Dabur today. But overall, if one were to look at this sector, there was some slowdown seen, and specifically in the rural market from where these companies get majority of their revenues from. So if one were to stick to quality in the FMCG pack, which is also viewed as a defensive space in the market, like where we're seeing some bit of profit booking now at higher levels, valuations are a concern. Which are the key stocks in this space that you're tracking, or you would also recommend buying at these levels?
So at this levels, FMCG is clearly trading at a significant premium. Valuations are not in the favor. Again, going forward, we will see a time period in which there will be consolidation in prices as well. So the ideal thing to my mind would be to pick a pack of FMCG companies and get into an SIP mode into that set of companies.
So you're not advising a direct investment?
Not at all, because I think the first quarter numbers, as the results come in, markets could get disappointed. So the management commentary which has come post the fourth quarter results has not been enthusiastic at all. So it's better to find that quality stocks, wait for the results. I think the results will give a negative surprise on the price as well. So get into an SIP mode and invest into those set of companies. Do an SIP over a 3-month period would be a right strategy to get into that set. I think in that category, apart from FMCG, maybe something like in the automobile space. Because there it is lot of value also.
That's giving you valuation comfort after the correction?
Significantly. And auto is a space which is a structural story going through a cyclical issue right now. So it's not that, cars in India are not going to get sold over the next 3-4 year period. We are not an aging economy. Right now, yes, there are headwinds in the sector, but that is when the opportunity comes to go and buy the stock. So I think if you look really long term and invest into those opportunities, I think that would be the right strategy. Also do an SIP.
Just wondering, what's your, and I constantly ask myself as to how is it that anybody can say this with conviction, that whether this slowdown in autos is structural or not structural. I mean, I can understand when R.C. Bhargava comes in and says that, he believes that from August things might turn around. But how is it that anybody is to know that, I mean, there's so many people who say that, oh, this time it's different and the slowdown is structural. How does one know that?
So let's look at some numbers.
Or vice versa, of course.
Yeah, let's look at some numbers. If I look at automobiles, right now the passenger vehicle penetration is 28 per 1,000 people in India.
But the per capita is very different, right? And I see these comparisons being drawn with China, that India was at these levels, Europe is at these levels, and China was at these levels, etc. The infrastructure and the per capita is so different.
Right. The passenger vehicle is at 28. The two-wheeler is at 130. This is Indian numbers. Okay. So the 28 and 130, again from Indian itself, the two-wheelers migration to four-wheeler in the tier 2, tier 3 cities can certainly happen. So that is why I'm saying that with rise in the income, as people grow up the income level, they would like to upgrade from maybe a two-wheeler to a four-wheeler, and then into that four-wheeler into the higher ends. That's the graph of life. So I think that is what can happen. We are not comparing with China or US.
But excuse me.
No, fine.
Isn't this just a phase, because besides cyclicality factor, there are liquidity concerns. The NBFC liquidity concern is having a knock-on impact on the space. Regulatory concerns of BS6 implementation, and of course the higher axle load norms, which have led to lesser sales of trucks now, which we've seen in the recent past. So besides that, are these factors also impacting, and do you think the next financial year could be better for autos than the current one?
Yeah, so I think the next financial year will be better. The current one will not see a significant improvement at all. The BS6, which is actually going to result into the higher prices for commercial vehicles, I think people are going to wait out and not jump. So the broader perception of people is that they will preempt the buying. My sense is that they will hold on to their purchases, wait for the price hikes, and then maybe get into the next financial year. So the numbers could come from next financial year for the commercial vehicle pack, and that is why I think you can also look at auto ancillaries. So when I'm talking about automobiles, there are few companies which are supplying to all the segments. So there are companies, let's say Lumax Industries, which makes lights and has a 40% market share. They are the ones who are supplying to an HMSI, they are the ones who are supplying to a Maruti, they are the ones who are supplying to commercial vehicles manufacturer as well. So if we get into that space and not look at just one pocket, again with 40% market share, and even if tomorrow we migrate to an electric vehicle,
you still need lights.
Lights will be there. So I think that's the way we have to differentiate and try to get into this opportunity.
That's an interesting way to look at it as well. The other pack which has been a talk of town, and primarily due to one player, is aviation, right? Now Jet Airways today intraday was down about 50%, currently must be down 40% if I'm not wrong, 43.5. So it's been a one-way graph, and 80% market cap lost in a matter of 10 days. Tells you, one, that the person who was holding on was being silly when he did that. But two, the question to now think of is that not whether one should buy Jet or no. That answer is a foregone conclusion. Is the story of Jet's loss, Indigo and SpiceJet's gain, has that story played out already, or do you think some portion of that story will slowly play out over the next 3 or 4 quarters, and therefore should one buy into these names?
Yeah, great question as usual. So I think Jet the story is done with. Indigo certainly now has more headroom for growth since the next best competitor is out of the business. And the only thing which I think will be, supposingly the government takes a stand in terms of privatization of Air India. That's the only thing to watch out for in terms of Indigo's flight right now. Till the time we do not hear such issue about privatization of Air India or anything happening on that front, it's a clear weather for Indigo that it could keep on doing well, because now more market share gains will certainly happen. Again, I believe they've ordered new flights as well. They are almost about 230, and another 400 is what they are placing now. So they are on the growth path. Competition is done away with. So in any industry, when there is consolidation and the next big competitor gets out, there is open room for the company to grow. Again, as I say, valuation will be critical. We need to get into that phase of maybe SIPs over a period of time so that you don't run the risk of buying anything very, very expensive. And I think that would be the good strategy to adopt in case of Indigo. Again, between SpiceJet and Indigo, Indigo would be certainly preferred and would be the better one to ride on to this opportunity.
Okay, I'm guessing standard disclosures, please don't take these as recommendations strictly. Do your own due diligence before you go out and buy any of the stocks, whether recommended by Sunil or anybody else, or even Sacchitanand for that matter. Please keep that at the back of your mind. So very, very important to do that.
Can we just pull up Jain Irrigation? I think it's seen a very, very sharp fall. I know the stock was down. Yep, it's down 23 to 24%. And with regard to this company, of course, there were various factors. One was the pledge which the promoters have. It's about 45% of their holdings, and then it's a highly leveraged group. There's a lot of debt sitting in. Of course, the recent phenomena was if the monsoon will be normal or not, or below normal, probably that may also not augur well for this company. So Jain, 23 to 24%, it's just hitting fresh lows almost every single day.
And the downgrade, right?
So, yeah, the downgrade as well.
You could argue about whether the downgrade happened due to almost the right reasons, because a lot of talk about how it was a day missed, etc., and so on and so forth. But I don't think the market is in any mood to like any of the companies which are so heavily indebted.
These are high beta counters, and the market is seeing any sort of robustness.
It's just the mammoth amount of debt that has existed, and the serviceability of this, if it is a big question mark, Navneet, then how do you predict with confidence the sustainability of organizations? I'm not saying it will not sustain. I hope it sustains. A lot of families thrive on it, but it's just looking very, very difficult because of the quantum of debt on the balance sheet.
Yeah, if I'm not mistaken, it's somewhere about 4,000 crore of debt.
Northwards of that,
northwards of that, maybe. The company is sitting on a huge amount of debt. But Sunil, I know we've spoken about sectors. Do you have any views on Jain Irrigation, by the way?
Or any of these highly leveraged companies?
High beta, high leverage.
I think the right thing for an investor or anybody in the market to do today is just look at their portfolio of stocks and just see the amount of debt which is there in the balance sheet of the companies that they have in their portfolio. I think this is a very simple exercise which anybody can do, and if you are seeing such levels of debt which are actually bloated up, please just liquidate, or if you see pledge in the shares of the promoters, I think that would be the right thing to do, because I still believe that this NBFC's issue is still not completely come out in the open. There could be still lot many companies which would still come up with this issue. So daily we hear one group or one company or one management coming out in the open, but there could be still lot many which are there. In fact, in the NBFC space, I would be worried about the exposure that they have to the real estate. The real estate, the loan against property segment that they have, and the unlisted realty developers are going to really create a lot of issues for this NBFCs going forward, because the value of that property is still not known today. So you're not actually booking any of those as NPAs and writing it off in their books. I think that is one huge area which will come up in the future. So it's better to be aware in such situations and just be with the quality. In the FMCG pack, the Nestle's of the world and the P&Gs of the world and the Mercks of the world, I think that would be a prudent strategy. Just rejig your portfolio at this level is what my thought would be for anybody right now.
Devan Housing down 16% now, pull up that stock, and the entire Anil Ambani group companies, infra, naval, power, all of them seeing cuts of between 15 to 16%. These are all high beta counters for you, once again coming under severe selling pressure.
It's just looking so ominous. Reliance Capital is the last one. We should pull that one up as well. That's around about 13% from 90 rupees. It went into the F&O ban at a price of about 84 or thereabouts. When the con call happened, the Anil Ambani con call happened, there was a bout of up move on that intraday basis in Reliance Capital. The stock went up to 93 on the spot. It's currently at 62 on spot, and I reckon it's still in the F&O ban, Navneet. So no fresh positions, and still the stock has just been getting hammered out of shape. So it just shows the vulnerability of some of these names. Before we get in a management phone, and Sunil requests you to stay on, we need to talk a bit more. But before we get in a management phone, just need to get in a quick word from Sacchitanand on some of these stocks as they are correcting quite viciously. Sacchitanand, how do you look at these charts now? And the bouquet is wide, right? ADAG, Jain Irrigation, Dewan Housing, I won't put in an Indiabulls and a Yes Bank there because they're different kettle of fish in terms of pedigree and quality maybe. But that entire second rung of stocks which are getting hammered right now.
Well, if you look at the ADG pack, one need not be hopeful. In fact, the trend and the momentum has clearly been very strong on the negative side. So whenever there are certain bouts of pullbacks, people do tend to try to find a bottom here. But I think the story is very well clear. The direction is very well set. So any particular respite should be utilized to exit positions in case, even if right now people are hopeful about getting a recovery here. But when we look at something like Yes Bank probably and Indiabulls Housing Finance, the kind of positions again which are getting established, probably we may see some kind of stability in these counters. But when it comes to ADAGs, they are definitely not bottom fishing candidates, and definitely we may see more pain in this particular bouquet itself. So definitely avoid bottom fishing in some of these ideas. But I think something like Yes Bank and Indiabulls Housing Finance, there is some ray of hope.
Okay, that's about all these stocks which are seeing severe fall in the last few minutes of trade. Let's shift focus and talk about the iron ore maker NMDC. Remember, the stock was in focus last week throughout because their mines in Chhattisgarh were non-operational, from where they derive almost 70% of the revenues, but those mines have reopened, and the management had given a confirmation around the same. And the other reason why probably the iron ore makers are in news, because globally too the iron ore prices have been going high. So let's get a better sense as to the entire situation, what's been happening at Chhattisgarh, and what's the outlook on the iron ore prices. We are joined by Mr. Amitav Mukherjee, who joins us on the phone line. Hi, Mr. Amitav. Good afternoon to you, and thanks a lot for joining us today on Bloomberg Quinn. First up, just give us a sense as to what's the situation now. I know the mines are operational, but for the time they were closed, what sort of loss that the company has seen?
The mines were closed for 6 days.
Okay.
One of the mines was closed for 6 days. That is, the Kirandul mine was closed for 6 days, of which one was a holiday. Wednesday is a holiday there. And Bacheli was closed for 1 day, which was a holiday, so there was no production loss there. So the net production loss at Kirandul was for 5 days. This part of the year, we normally do around 30,000 tons per day. So for 5 days, we would have lost a production of 1.5 lakh tons. But in this context, I'd like to tell you that in the first 2 months of Q1, we have actually done around 1.5 million tons more than we did last year. So we were already plus 15 lakh tons at that point of time. So these interruptions would not affect our overall outlook either for Q1 or for FY20. So those remains, because in the mining industry there are a lot of disruptions because of monsoons, because of evacuation of facilities being damaged sometimes, like railways or pipeline. So the overall outlook for the year or the quarter does not change.
You said the production loss was about 1.5 lakh tons. So what would be in value terms if we look at the price hovering around 3,000?
The rate of realization at Kirandul is around 3,000 rupees a ton on an average. So that would be around 45 crores of top line.
Okay, so that's an impact of 5 days, roughly about 45 crores. Okay, but have you reached some sort of understanding with the tribals? Is the situation now completely fine, or one can expect more mishaps of these sorts in the future?
No, these are the things that we cannot comment on, because that agitation was for Deposit 13, which is under the NCL or NMDC CMDC Limited. And I cannot speak on behalf of that company because I'm not a functional director there. I'm just there as a nominee director. So for that, on this issue, I'll be unable to give you details.
Sure. Your outlook on the prices, since we've seen globally the iron ore prices moving higher, I believe they're up about 45 to 50%, but in India the prices have been up about 15% so far. So what sort of price differential right now do you have with the Odisha mines and of NMDC?
Yeah, what happens is that, the Indian prices are linked with the international prices, the seaborne prices. Seaborne prices, as you know, is currently around 108, 110 in that range. Today it was, I think, 108. Yesterday it was 110 and all this time, right? So that is something that needs to be factored in, that our export duties are today at around around 30%. So at 100 rupees also, my exports do not make too much of sense. So to that extent, there's a delink between the international prices and the domestic prices. Our domestic prices are much lower than the international prices, right? But yes, we had increased the prices around, I think, 15-20 days back, slightly after taking 4 or 5 price cuts during that time in the Q4. And the average realizations right now for NMDC stands at around 3,000. The basic realization without the duties, it's around 3,000 plus, somewhere around that.
Okay, but how much do you plan to export for this year? Because we've seen the export amount coming down in FY19. Now, considering the global prices have been inching higher, do you plan to export more and bring down that margin differential which is there between exports and the sales you do in the domestic market?
Now, what happens is that our export is based on an intergovernmental agreement with Japan and Korea. We only export to these two countries. And the quota for us is around 3 million tons. So we do somewhere between 2.6, 2.7, 2.8, depending on the needs of the Japanese and the Koreans that way. And this is based on a concessional export duty only for us, which is around, 10%. And this does not attract 30% normal duty, because at 30% even this it's not viable at even $108. Last year, what the problem was that we did not have export contract for the first 7 months. So that is why the last year the exports were much less. Not because that we didn't have enough the material to do so, but because essentially we didn't have the contract. It only came in Q3. The contract was again renewed, and since then we had resumed our export operations. But above this concessional quota of 3, it would not make much of a sense for us to export because of the export duties of 30%.
Okay, Mr. Mukherjee, we leave it at that. Thanks much for taking the time out and being with us.
Thank you.
Okay, running out of time. Need to slip into a very quick break. Just wondering, Sunil, are you negative on metals and globally exposed companies currently? Quick thoughts here.
Yeah, so I think the way in which things are going on in the global markets, certainly it would take a lot of economic activity slowdown. So I think the slowdown in the economic activity is going to be one of the reasons why those prices could also come down. So that is why maybe the metal pack is better avoided right now, in that sense of softening of the prices which could happen going forward. So,
well, stocks have certainly looked weak the last few days in today's session too, very flat. Time now for a short break on Countdown. On the other side, we'll get you the Fab 4 stocks of the day at 3:15. We get you what dealing rooms are recommending and then some closing strategies. Stay tuned.